Every trader has been there. You take a loss, maybe a big one. Your heart sinks, frustration builds, and suddenly, the only thing you can think about is making it back, fast. That's the moment when most traders fall into one of the deadliest traps in the market, revenge trading. Revenge trading is when emotion takes control of logic. It's when your need to win back what you lost becomes stronger than your commitment to your plan. You start forcing trades. You enter setups that aren't there. You double your position size. You ignore your risk rules. And in the end, you dig the hole even deeper. But here's the truth. Every professional trader has felt that same emotional fire. The difference is they've learned how to control it instead of being controlled by it. So let's break this down. Why does revenge trading happen? And more importantly, how can you stop it before it destroys your account and your confidence? It starts with understanding what your brain is doing after a loss. When you lose money, your brain reacts like it's been physically hurt. It triggers the same regions associated with pain and stress. That pain demands relief, and your brain looks for the fastest way to ease it. In trading, that relief feels like getting the money back immediately. That's why you feel the urge to click buy or sell again without thinking. It's not strategy, it's survival instinct. The problem is that the market doesn't care how you feel. It rewards discipline, not emotion. And the moment you let emotion dictate your next move, you're no longer trading probabilities, you're gambling. So how do professionals handle this moment differently? They understand that a loss is data, not danger. They step back and analyze the trade, what went wrong, what can be improved, but they never react impulsively. They know one simple truth: you can't recover emotionally and trade rationally at the same time. Here's the first rule to stop revenge trading. Pause. The moment you feel that rush to win back what you lost, step away. Close your platform. Take a walk. Let your emotions settle before you make any new decision. Because a trader ruled by emotion is a trader already beaten. The second rule: reframe the loss. Most traders see a loss as failure. Professionals see it as feedback. A single trade doesn't define your skill. Your reaction to it does. Ask yourself, what did this trade teach me? What can I improve in my plan, my execution, or my patience? This shifts your focus from punishment to progress. Third rule: track your emotional triggers. Start journaling not just your trades, but your thoughts and feelings. When did you feel pressure? When did fear or greed creep in? You'll start noticing patterns. Maybe you chase losses after missing a big move, or when you trade tired, or when you break your rules. Awareness is the first step to control. Fourth, use size to protect your psychology. Most revenge trades come from over-leveraging. You're not trying to make a logical profit, you're trying to erase pain. That's why professionals always use position sizing as emotional control. They never risk an amount that triggers panic if lost. Trade small enough that you can think clearly. And finally, adopt a long-term mindset. One trade doesn't make or break a career, but one emotional reaction can destroy months of progress. When you start thinking in terms of hundreds of trades instead of one, you realize how meaningless a single loss really is. That's the mindset shift professionals live by. Let's put this in perspective. Imagine two traders both take the same loss. Trader A gets angry, jumps back in, doubles his lot size, and loses even more. Trader B takes a break, reviews the setup, and comes back the next day calm and focused. A week later, Trader B has recovered naturally through discipline and good setups. Trader A has blown his account. Same market, different mindset. This is why trading is 80% psychology, because your emotions will always try to push you into revenge mode. Your job is to catch yourself before it happens. Whenever you feel that pressure, repeat this phrase: I don't need to win back. I need to trade well. That's the difference between amateurs and professionals. Amateurs chase losses, professionals protect their mindset. And here's something powerful to remember. Losses are part of the game. Even the best traders in the world lose trades every week, but they don't lose their discipline.
That's what keeps them consistent. If you can master your reaction to losing, you've already beaten 90% of traders out there. Because most will keep chasing, keep forcing, keep repeating the same cycle until they finally realize the truth. Trading success isn't about winning every trade. It's about controlling yourself when you lose. So next time you face a losing streak, don't fight the market, study it. Don't seek revenge, seek understanding. Don't rush to win back, rebuild your focus. Because in the end, trading isn't just about charts or price action, it's about mastering the space between your emotions and your actions. If you can control that, you can control your trading. And when you control your trading, you control your future.